Ladies and gentlemen of the crypto space, we're live on a Monday, June 20th at 11:54 a.m. Let's keep a topic that is very simple today. And I wanted to talk about a market. What is a market? And what do we do with crypto markets or equities markets? And fundamentally, what is the psychology going on? And it's a very simple thing. It's a cash grab. And it really all reduces to units of account, and it gets complicated because of varying denominators, varying fiat markets, and the relationship between them on a forex level, because there's a forex market in addition to a market for each respective fiat denominator. So it's the deeper down the rabbit hole you go, it's complicated. So for me to process it the most simply, I understand and respect that anytime you can buy and sell something, which is the basis of any market, it's a cash grab. You want to purchase prior to other persons purchasing that raise the price, and by you selling after other persons purchase, you are taking their money. So if we understand that, we can trade. That's the fundamental basis for trading behavior. But what is different about certain types of equities, and especially the more interesting crypto that I find appealing, is the notion of cash flow and the surfacing of cash flow to investors. Now, traditionally, that's called a dividend, and the dividends have been completely neutered in their usefulness. The shares have been diluted to the point where dividends are not of interest to me. Plus, I don't find the businesses that they're engaging with appealing. I don't like boards. I don't like overhead. I don't like human resources. So I find the most interesting market right now with regard to an industry that has likely tremendous upside, has a capacity to surface cash flow to its investors. I find that market, the crypto space, much more appealing as compared to the equities markets. Anyway, so that takes us to the crypto space. And it's the exact same thing in the crypto space. Buy low, sell high. If you buy it now, you want 10 people to buy after you so you could sell it and take their money. And that's the way markets ultimately work. But from a cash flow perspective, that's an incentive to not sell because you're being paid not to sell. The business is incentivizing you to retain their asset. Now, optimally, you have a fixed quantity of assets that can be purchased that surface this cash flow, a fixed quantity of shares, so to speak. Otherwise, it's being diluted. Your ownership of the total quantity of shares is being diluted. So we've dug into monetary policies of various crypto protocols over the years, and it's been a massive amount of experimentation, increasing supply, decreasing supply. And it doesn't matter whether it's a great monetary policy, it doesn't matter if it's, let's pop over to the main screen. It doesn't matter if it's a deflationary monetary policy. It's not going to prevent the selling of assets because of the fundamental behavior, the fundamental action or purpose of a market is to buy something so you can sell it after other people have purchased it. So this is probably one of the biggest learning lessons that anyone can have in the crypto markets, especially is the volatility. Everyone's going to sell everything, especially if there's risk, especially if there's contagion and the risk is spreading and the fear of the risk is spreading. And that's where we're at. Has been sold hand over fist. If you hopefully folks remember a couple of tweets over the months, if it's not paying you a shitload, it's gonna be sold. And that's exactly what happened. Because even if it's paying you, it's gonna be sold. So of late, people ask me, what protocols am I most interested in? I'm interested in very few, because there's very few protocols that haven't been completely annihilated with sales because they surface cash flow, and there's very few protocols that actually do that from a sustainable enterprise perspective. And if you evaluate these protocols as an enterprise, are they actually making profit that's greater than their capital expense, their capex? So there's very few successful businesses. So people are like, why do you only like Curve? Why do you only like Frax? Why do you only like a couple of protocols? I mean, Mutable X is very interesting. GMX. Bancor's got complexities going on, but that's a monetary policy experiment, and it is what it is. Um, because there's not many good protocols. And we've seen the vast majority just get sold down to the bone, down to the ground. So even if it's paying, it gets sold in a time of fear and a time of contagion. So the only thing, the only characteristic that offers a potential to see something that will survive is if it pays you and it's cash flow positive. Otherwise, it's not going to survive. It's going to do exactly what every protocol did in 2017 and leading into 2018. End of 2018. And in 2019, everything died except for a couple of protocols. Interestingly, I saw Komodo talking recently, and that was good to see. It's good potential there from a technology standpoint. It's good to see their name still around. Komodo. Very interesting. 16, 17 was a very interesting market, and it's good to see how some few protocols have pivoted to maintain relevance. But what's the most relevant thing in today's market is cash flow as an enterprise. And that, I think, is the most meaningful characteristic, an attribute that will indicate potential survivability. Survivability. What will survive? And obviously, the core protocols that I look at, I personally believe they will survive. Curve, Frax, and convex and derivatives, and you could also be tempted by the curve derivatives and the other protocols part of the federation. Stake DAO and SDCRV is very powerful in how it's packaged the various sources of cash flow associated with the CRV asset and the Curve network. So it's very tempting, but I like to remind myself, just like as I always talked of the DAOs of Olympus and Wonderland, and I was more interested in the protocol and what the ancillary protocols in the Federation did is they sucked supply out of the market. All the derivatives of CRV, SDCRV, MCRV, Pyrex CRV, and CVX CRV, all they do is withdraw liquidity from the market. So all they do is support the asset over time. Now, for me, that means Curve is just the only interesting asset that I look forward to really surviving. I don't need the derivatives because there'll be more derivatives. What do you think? In a bull market, there's not going to be more derivatives? In a bull market, everyone's going to be chasing the asset that has limited supply. There'll be more derivatives and there'll be more restrictions in supply. So, what has happened in a bear market? We have a restricted supply. It hasn't breached lower lows compared to the late 2020 after hyperinflationary decay. So we're in a very different it's a very different status or very different situation for the asset now as compared to the last time it was in this price zone, in these levels of price. There's less supply, or well, actually, no, there's about equivalent supply. There's been almost no inflation, maybe a couple of percent at most if we look at the data, which I'm not going to do at the moment. Which is crazy. After all this price action and barely any inflation, we find ourselves in a price zone. But the difference is now we have a massive federation. So, does it have a chance of surviving? That's where my mind is. And I would say, hopefully, yes. Because if it survives into another cycle of capital inflow and people wanting to purchase and appreciation, another appreciative cycle, it's going to cause even more supply disruption. And that should increase volatility. So volatility becomes more pronounced to the downside as well as the upside when circulating supply is disrupted. So the monetary policy, circling back around to I guess the title of the stream. Let's pop it up. The foundational function of a market is to take money from people that bought after you. Okay, so now we talked about monetary policy and we talked about primarily the two monetary policies, which I find most interesting, fraxes as well as curves, and how that lends to potential survivability. So no matter how awesome a monetary policy, the next cycle, you must not neglect the reality of what a market is supposed to do. You're taking money from people that bought after you. So we understand the properties of protocols to assess which one could potentially outperform, which one's going to potentially do better. And you should remind yourselves that you don't need to own all the cool new toys, the cool new gadgets. That's what a lot of people did last cycles. And this goes into like never go all in, never spread too thin. People were spread way too thin. They're like, I gotta own this, I gotta own that. And that's not necessary. You know, if these markets do what everyone expects them to do, you're not going to need to own many assets. And you're not going to need to own the fresh, shiny new shit that's completely untested and you have no idea how the market is treating it. Do you guys know that Bitcoin ripped 20x off March 2020 lows until highs? So you telling me you can't get a 10x off Bitcoin the next run? Catch Bitcoin at what, 12, 15,000 if it bottoms around that area, if there's further contagion? Let's take a look at the Bitcoin chart. Where's Bitcoin? Yeah, Bitcoin's here. So check this out. On the weekly, look at the RSI on the weekly. That is some oversold RSI on the weekly. Wow. We haven't had an RSI on the weekly like that since 2012. Doesn't mean much for where it's heading, but it'd be nice to see it perform something comparable to March 2020. How is this event or the events of the last couple of weeks comparable to March 2020? It's not. But from a technical standpoint, wow, we pushed below the 200 SMA in the weekly. It's obviously the log chart, so it's biased in some regards, but that's pretty incredible. The last we saw a push below was at 15. I don't remember 15 too clearly what was going on back then. This is more fresh in my mind, March of 2020. Plus, it was a very different market back then. Very different market. 16, 17, and compared to what, 2020, 2020, 2021, maybe there's overtones. Definitely overtones of exuberance, but even that was a very different market. There was no market back here at 15. It was Bitcoin and Ethereum. It wasn't even like there were ICOs. ICOs were 16, 17. So it was a very different market looking at it back here. So we find ourselves in a technical position, if anything, is comparable to March of 2020 with the breadth of move to the downside, with pushing this RSI as low as it is on the chart. So never go all in, never spread too thin. You don't even need anything more than Bitcoin to get multiples on the money. So the question really here is like, is the macro lining up? I don't know. A lot of thoughts going on in my mind, and I don't want to digress too much. I don't want to get into capital gains type strategy. I was more interested in talking today about what's most interests me, which is monetary policy and survivability, and helping folks understand that even though you got great monetary policy, shit's gonna get sold. But here, there's one part of the title I didn't talk about: cycles. Recency bias we talked about, I guess. So obviously recency bias is mostly dead at this point. Like nobody's like buy the dip, buy the dip. I think buy the dip is dead at this point. I don't think I have to really cover recency bias too much. But cycles is an interesting one, and then I'm going to answer some of you guys' questions. We'll wrap it up for today. So capital flow, emerging market cycles. This is a market. I would imagine it's emerging. It's not like a big market, so it's totally analogous or completely well compartmentalized in the way we talk about sovereign emerging markets, actual countries. Why? Because capital is getting stuck in the market. So we follow the stable coins for that. DeFi Llama? Does it show stable coins? Stable coins. I mean, you see our dip, we see our liquidity contraction. There's a lot of stable coins, Jesus. But this is why this is our bull market. This is our liquidity. This is capital inflow versus outflow. Why? Because if capital is flowing out, it's leaving the stable coin. It's going back to either a physical dollar or some sort of liability on a balance sheet somewhere. And it's going into other markets. But if it's staying in stablecoin form, that's equivalent to capital inflow into a market. So what I want to see, obviously this is literally only 2 years. We have no sample data. We have no history. But what will be nice to see in hindsight is higher lows. And that means capital is sticky, getting stuck in the crypto space. And that is by definition a successful emerging market. The cycles going higher and then higher and higher, higher lows. That was a very horrible hand gesture that did not help whatsoever. But if you really want to see where the crypto space is with regard to cycles, it's here. If you start to see an uptick in stables, that means capital is flowing back in. If capital is flowing back in, what the hell are the stable coins going to do? They're going to buy stuff. Either that or provide liquidity, but if they're not productive or satisfyingly or productive to enough of a satisfying degree, they're going to go chase returns. They're going to chase yield. They're going to chase gains. Why else are the stable coins here? To achieve those gains, to chase that yield, so on and so forth. So this is a very meaningful total market cap. This is very meaningful. What was that, November? No, about May. That's interesting. So stablecoin liquidity kept going up until May of this year. Wow. I wonder if we could get confirmation or additional information to assess the accuracy of this data. Because I would think stablecoin liquidity started draining a little bit earlier. Maybe look, okay, inflation. With regard to inflation, you'll see growth and you'll see expansion of the crypto space, the change in Y. So it started to peter off and not have a big DY change in Y. I mean, back in December, Look at this. Look at that slope. Look at that slope between October 31st and December 7th. That's a very big slope. That was a big growth. And now it's completely flat. You could see the wish I could draw on this, but you can see the complete change in slope of the line. What was this? This was January. Look at that, January to June, and that was a massively bullish period in crypto. I bet that's what we'll see. We only have 2 years of data. In the next 2, 3, 4, 5 years, we'll see more data, and we'll see that when there's large inflows of stablecoins, we have great growth or great expansion in the valuations of assets, and the inverse, obviously. And this is exactly what happens in emerging markets when capital flows into another country for investment purposes. You see growth. See stock valuations up. You see purchase orders for goods and services, so there's more demand, and there's more capital churning through the system. There's probably leverage, greater velocity, and then an expansion of a market. So that's what we saw during these periods of increasing stablecoin concentration, and this is just a collapse, but it's not a total collapse. It's not like we're down at zero. It's a retrace, but it's obviously systemic because look at the velocity, look at the slope, look at the slope. That's what counts. The slope is what counts. Dan's in the house, Big Twat, Breakless Rider, Ian Peters, Underfighter, save us, Noah. Where's your R? There's no saving, unfortunately, my friends. If the saving was in January, February, and March, when I was just saying it's going to go lower than people could possibly imagine. And what's important is to carve out cash, and you're not, and to have a certain rigorous way that you look at capital management. When I say capital management, I mean cash, I mean assets, including crypto and equities and whatever you want to talk about, precious metals and whatnot. It's overall portfolio structure. That's capital management. How do you manage your capital? So next time, the biggest learning experience I've had is carve out more cash, less exposure to the markets, more concentration. I want to own less. I want to own more of fewer assets and not be afraid to carve out large cash positions as those assets appreciate significantly, run multiples, and as those assets produce revenue. I don't want to necessarily reinvest income. I want to store that income in stablecoin form such that there's optionality, a choice to be made, and you have to protect that income, that free cash, because this has a capacity to service overhead, and overhead being how you actually live, and two, it has a capacity to allow you to invest. So you want it's a critical part of the portfolio is the cash position. So I think we all underestimated the significance of the cash position, and you could probably assess in hindsight how well things played out over the last cycle and how well respected the cash position was. We're all here in many regards because we're angry at the dollar. You got to get over that. Dollars in very short supply, and this is a very big world. It's a very complicated world, and there is a large lack of dollars. It's a large lack of dollars. Very complicated system. Big shortage of dollars. So let's finish up a couple of comments, and I'll stop confusing you guys for today. I'm okay, Tapsy, a pleasure. Dan, have you looked into the liquidity pool with LUSD? I don't know what you're referring to. LUSD is cool, but I'm not interested in it at the moment. Hola, James. Hello. I like GMX2. It's held up well compared to others. Yeah, I'm not interested in it as a position, but I'm interested in the fact that it's actually surviving. It's good to see it survive because if it survives, which it has a good chance of surviving, that's a good part of the industry, and the industry draws in capital, and the industry creates velocity and movement of money, and I'm interested in a percentage of that movement of money. So that's why I like the curve. So you realize if GMX does well, that causes value to you could it generates value for curve owners. If you don't see the relationship, or pick another LP. I mean, I guess well, more interested in Curve. Curve's monetary policy is what piques my interest. There's absolutely nothing in Uniswap. It's such a useless system, horribly useless system. I mean, what's the innovation of a capacity to swap if there's no disintermediation of the functionality? If you still have an enterprise where they're concentrating all the wealth and all the returns and all the gains, it's horrible what they did, in my opinion. No interest in Stake DAO's SDT. No interest in Stake DAO's SDT. I'm not going out on the risk curve, my friend. There is no risk curve going on right now whatsoever. Right now, for me, it's just sit back, and if I'm getting any money, I'm getting any income, I'm grateful. And that's the bottom line. So protect whatever you have. Let's look at the dollar real quick. S&P find its support in the 200 EMA. Nasdaq just the breadth of the move to the downside is extraordinary, and it's just a massive depreciative cycle. It's going to be interesting in hindsight how this plays out, because this is a massive move compared to March of 2020. This is a massive move compared to 18, and it's huge compared to even the GFC, the financial crisis. Let's go out to the monthly and we'll put it into perspective. I mean, look at this move compared to the 2007, when November 2007, when it started coming down, because it took almost 1.5 years for it to find bottom. But look at this move. It's only a couple months. It's November 21 to pretty much reach the price differential top to bottom on the GFC. So this is a big event. It's not insignificant. And this is a lot of years. Very interesting. Franz, are you staking your curve with Curve Finance or Convex? I opt for CRV directly with VECRV in the vote blocks. I'm my Convex positions VLCVX unlocked towards the end of the month. It's June 20th. Yeah, let's take a look. I think I'm going to put these into CRV, VCRV. I got a little, almost maybe 164 grand left in there. 10 days left. Maybe this is another month on that. Maybe I'll take out some cash. Maybe I'll sell some cash. I don't care if it's at a loss. No big deal. Um, Maybe it's at a bottom. I wouldn't mind another 100,000 CRV, VCRV. We'll see what happens. I got another 20 days. How much longer do I have? I got another 10 days. All right, I'll make a decision in 10 days. That's like next week. We'll see. Um, that's the deal. Almost at my 32 ETH target, a much lower cost basis. Pretty cool, James. I think there's significance to that kind of position. I think it's meaningful. I don't think it'll be just symbolic. I think from an infrastructure perspective, it could be quite meaningful. Detractors often underestimate where this technology is heading, and we don't know where it's heading. But the fact is, it's powerful. It's powerful tech. Why is it powerful? Because so many people are involved with it, and so many people choose to engage with it, and that's attractive. That attraction draws in participation, and over the years, that should just amplify in constructively and in a resonance type of way, building on itself year after year. So I like the notion of a node, and we don't know what the significance of it will be. And even some of the most brilliant minds out there are quite negative of Ethereum POS. Like one of my favorite brains, Lynn Alden. is not too fond of proof of stake. And I agree. I understand her argument. I understand what she's saying. But I also like the notion of we don't know where it's going to land until it actually lands. And I don't like to judge things beforehand. I like to assess things the way they are. So we don't know because it's not launched. We don't know how it behaves and how the market actors behave and how the system gets consumed by the population. We don't know. And you can really assess that, only really assess that in hindsight. Um, Grabbing more FXS, Sol, and GMX looks cool. A whole lot of speculation you got going on, James. This is not a time to be necessarily accumulating or speculating, but obviously that's a subjective choice and that's your discretion. Personally, I that's not something I'd be interested in at the moment. The good cheap prices, but cheap prices doesn't mean it stops going down. Cheap prices doesn't usually entail maximum risk, maximum reward, and standard types of statements like that are always applicable in it for eternity. Max risk, max reward. Sure, if it bottoms at 350 FXS and it goes to 300 in 5 years, whew, that'll be a hell of a story. Well, we'll see what plays out. We'll be able to assess in a couple of years. I so much agree with your view on markets. Got to the same conclusion after watching my locked assets go down so much. Well, the locked assets have done better than many other assets. I mean, 80, 90%, but they're still paying. Still paying. I've watched the curve position turn from 6, 7, 800,000 into like 3, 400 at this point. Even more. It was worth a couple mil at some point. But there's like last week, I still was able to claim $5,000, $6,000 from the curve position. So I'm grateful for that, and it's a way to look at these types of positions, not at just the principal valuation, but the income that they generated, and is that income sustainable? And how do we measure the meaningfulness or the value of a position? Is it just its dollar denominated price point? Because a vote lock position that is a 4-year vote lock, clearly the dollar denominated value of the position doesn't mean shit because you can't sell it no matter what. So it's more closely aligned with looking at it as a purchase. You can't sell it. There's no value because you can't sell it. But what's there is the revenue from. Is it sustainable? Yes. If third parties continue to incentivize voting, which they are, Convex still is, and there's Stargate didn't post anything this week on Vodium, but the Warden still has some incentives up, and we'll see. We'll only know in hindsight how this plays out, how sustainable it is. But I'll stand by my sentiment that this is the most interesting market, and CVX has been going up a little bit, so it's nice to see this inch towards back a penny per VECRV. Mike, why is buy the dip dead? Because everyone just lost all their money, my friend. No, because you bought at if you bought at 50, if you bought at 60 and you bought at 55 and you bought at 50 and you bought at 45 and you bought at 40 and you bought at 35 and you bought at 30 and you bought at 25 and you bought at 20, that's why buy the dip is dead. um, that's why we've talked macro for all these months to understand that you don't buy the dip in this market condition. Fine, you could buy a little bit, like 19. That was a hell of a buy. And maybe it goes lower, but it's not going to go racing up until there's liquidity. Until liquidity enters the system. Until there's some sort of inflow of capital that's going to chase gains or yields. Fran Corp, good evening. Raul, Larry, wow, what stablecoin is your favorite? USDC and GUSD as well as Frax. I think Frax is is a nice USDC derivative. That's the way I think about it. Also, let's go. Quite a stream. It's a pleasure, Larry. Hey, Noah, thoughts on impermanent loss protection pause on Bancor? Uh, well, I would steer clear for the time being. Hey, Noah, how long do you think before we see companies issuing tokens instead of stocks to represent ownership? Years. Many, many, many years. Lord of the Pine Cones, morning, gents. What do we got going on? What do we say? We say good things. We say that I'm quite content with the market. It's not being too mean to me. It'd be nice if it stabilizes for the summer. We'll see what happens with the 10-year yields. This is what I got my eye on meaningfully. I expect this to just keep going up. And in some regards, that is calling bullshit on Fed monetary policy choices, Fed funds rate. Um, but in other ways, it's worse. It's just a catch 22 because they're going to have to at some point not let it go up much further. How could they let it go to 4.55, 6% with the amount of debt servicing obligations? I don't know. It's a very interesting conversation. Can they even pay the interest? At what percent can they not pay the interest? Because everything takes so long in macro land because they took in a certain amount of money from tax receipts this year, and now we have to wait till next year or at least a couple of quarters to see how much money the government's going to take in tax receipts to know how much they could spend, how much capex they have available to them. It's still a business, so we could still look at everything as a business at the end of the day. But it's such a large structure, such a large business, and so many sources of revenue spread across all these states that you can only really assess how well the business balance sheet is doing after, at least at least 2 quarters, at least half a year to really see if they can actually pay these bills. What a mess. Um, Fed, so why would somebody buy Curve now and not wait until supply? Uh, I'm not sure how much inflation rate is at the moment, but no, I think most people get the numbers completely wrong on Curve. There's barely any inflation. If you go over to here, you go over to convex alone has there's been convex alone has removed 94% of emissions since launch. So other than convex, there's been 6% inflation. So there's less inflation in Curve at worst case than there is in the US dollar CPI in the continental United States. So that's food for thought. There's less inflation in Curve than there is in the dollar. Then if we go over here, we could see there was maybe there was a vote lock release and there was a large liquidation. There was a big increase in Curve versus VECRV. But I look forward to it. It takes months to see this data play out. You need another 1, 2, 3, 4, 5 months, another 6 months to really see where this is trending. But it looks like this was a critical inflection point between February of 22 and here. It looks like it's hard for CRV to have a larger value than VCRV because there's so many places that are drawing the CRV out of the market and putting it into voter escrow. And this is Banteg's chart, so this is very urine centric, and urine never really made it anywhere compared to convex and other. What is other? It's the combination of all them. Staked out never really had anything, but look at staked out, little peeking its little head up with SDCRV because there's some appealing characteristics to it. That's good to see. Anyway, so there's very little curve inflation, and especially during bullish times in the market, there's very little curve inflation, even more so when it's bullish. Um, the big twad, Noah, do you know what assets Jeff Snyder actually likes? No, I do not. That's an actually a very good question. Maybe he likes derivatives. Maybe he likes, spreads, and he likes to play the differences between interest rates, so on and so forth. I don't know. Maybe he just likes to do the analysis of how shitty the global financial system is. So whatever it is, it's quite meaningful and enjoyable to watch him do his analyses. If there's only 4,000 developers who actively build on Ethereum, why isn't every dev flocking over? There's so much money in the ecosystem, and the numbers of devs seem so low. Well, that's suitable for the we're early type of conversation. Because you need enterprise to pay. And right now there's liquidity constriction, liquidity coming out, venture capital is probably falling off a cliff. So there's a whole lot of factors that go into employment and enterprise getting off the ground. Uh, you know, it's literally only 2 years into the market. You look back at another 2, 4, 6 years. I mean, if we're 2 years in, remember Android. Let's say Android about 2011. There was nothing. There was barely any market. There was no third party contracting agencies. There was a couple of digital staffing agencies. Nobody really hired full time, but there was a job in Android, it was a full time employee, but it was a very limited supply in the market. Very, very tight market. There wasn't much employment. It took a while for employment to become very available. Like now, there's endless employment. So it's not a mature market. If and look, even mobile development, which is my industry, is still a new market, and it's only 14 years old, give or take. So, if anything, the only thing you compare the crypto space to from an emergent developer movement or developer ecosystem is mobile development, and that only has a 14-year history. I mean, 14 years ago in 2009 and 2008, but let's say 2009 for when iOS and Android really came out, but you had some beta stuff in late 2008. There was nothing. I mean, there was nothing with BlackBerry and Nokia, nothing compared to what there is today. So that's what's going on with crypto. It's the emergence of an entire new enterprise ecosystem with developer economics and products and services for the general public, so on and so forth. Dennis, did I hear of Tetra Node leaving? Okay, that's cool. He could do what he wants to do. Uh, I don't know where he's going. Everyone could do whatever they want to do. Maybe he's going fishing or going on a vacation of some kind. So not too much to look into. It's just another person with a 8 figures, 9 figures at one point, running around with his memes. He's a character. He's definitely a character. What are your thoughts on Solana voting to seize a whale wallet to avoid a huge liquidation event? I don't like that one bit. I think they should just let it collapse. I think there's some spoiled ass or crazy ass whale that has like what 10, 20 mil as not staring at liquidation thresholds. What's the matter with that person? That's what I worry about. Something's wrong there. Almost malfunctioning. James, 100% agree. Slowly DCAing in, and I'm working on getting some cash flow outside of crypto so I can keep buying if we get on 10K BTC. Yeah, you need to work. Anyone who quit work is crazy for quitting work during the bullishness of the crypto markets. That's absolute insanity. So you got to keep working and try and find some other revenue streams. And that's it. That's the process because crypto is just one of those revenue streams. Um, George, my man, good thing we are still higher compared to last year's US dollar valuations, despite everything being down 90%. I told everyone probably about a year ago that if you're down 95% on the portfolio and the portfolio is still up 1,000%, 2,000, 3,000, 5,000% from 2019 or 2020, then you did something right. That is the perspective to have. That's the low. That's the measurement of the higher lows. If your portfolio operates in terms of higher, low, and higher, low, and higher, low, then all you have to do to optimize the portfolio is better manage the highs. If you have higher lows, that means you cycled from a failing asset into an outperforming asset, an underperforming asset to an outperforming asset. An outperforming asset loses less value on the downside move. You've chosen wisely. Indiana Jones in The Last Crusade, you have chosen wisely. Measure from the bottom, optimize from the top. And this is a multi-year process because you'll have to wait another 2-3 years in order to get that top experience that we just had in middle of 2021, end of 2021. Shish had to cancel my Discord subscription because we're in deep austerity. Miss you all on the rational discussion so much. It's still a nice crew going on in there, and clearly I'm going to be there. And there's plenty of people in there still trying to figure things out, and it's got a bottom. Market's got a bottom, and you hit the nail on the head. The word is austerity, and you got to cut back. Only spend what you have to. Cover your damn overhead expenses, and in my mind, now is the time to spend prudently, and you can spend lavishly when the market is ripping. Sure, great, groovy, grand, but then we have to save. We optimize the top, so we're able to save and have cash for when times are bad, and that's proper financial management. Next time, we will all do better. That's the whole point. We have to figure out what we did, why we did it, how we did it, so next time we can do better. The only position I still feel comfortable with is Curve, still pumping out nice monthly salary. These are meaningful things. Meaningful in that something's got to survive all this experimentation. Something must rationally survive. I believe there's something here rather than literally nothing. Clearly, the vast majority is absolute useless experimentation. And in many regards, maybe we could even agree with like a Nuriel or even a Peter Schiff. Like Peter Schiff, very interestingly enough, he talks a lot of shit about Bitcoin. But he does say there's probably a crypto industry, which is very interesting. I find that interesting when I read him talk like that. Because, he does say that. He does say the vast majority of this shit will fail, but there'll be a crypto industry of some kind. And what that is, we don't know. And I agree with that. I have no idea what the hell it's going to be. So that's why I talk to you guys in terms of what survives. What survives has a greater likelihood than less of being part of whatever crypto industry emerges. JJ's in the house. A pleasure. James, have a good one. One curious view. I'm okay. I feel pretty good right about now. Noah, I love the continued coverage through these volatile times. What are your thoughts on Bancor revoking a permanent loss? I just steer clear of Bancor for a little bit, but I think, and I would hope that they're able to get on track as price points stabilize. I have always had a high opinion of the team, and I think there's a lot of detractors as always, but I think the monetary policy is quite innovative and interesting. It's not just inflation, there's deflationary components. So if anything, it's a very rigorous monetary policy that has capacity to mint BNT to make a person whole on a permanent loss, but also burn on the other side from transaction fees to prevent excessive inflationary pressures. And I remember metrics from V2.1 that suggested there was pretty much a net flat issuance of BNT or a very low level of inflation during good times. And that's relatively healthy. I mean, what is the Fed target? 1, 2%, 2%? So if you have 1, 2, 3% inflation, okay, so you're talking about an appropriate level of inflation. Do you think the market will react positively to gas rebate cards get approved and sent out, rate cuts in a couple of months? I have no idea, my friend, but generally, yes. Generally, I have no idea. Generally, I think it's just so pathetic. Gas rebate cards. It's just so, seems so trivial, and there's something that's off. It just seems so not effective, like it's really going to do something meaningful. And it's very frustrating. Anyway, George, my wife and I have taken to saying this is a time of austerity to each other multiple times. But it's a time of austerity. If you have a certain amount of cash, you have to think to yourself, when's the next time you're going to have that amount of cash? Do you want to spend it? Do you want to save it? No, the government wants you to not spend it. So this is a time where I would say we should comply with the government and probably not spend something we want to spend, save it, and because we don't know what's coming. And there'll be a time when it's easy money. Back in almost everyone that listens to me at this point will be able to appreciate when I say there will be a time when there's easy money. When you're just getting yield and it's just paying and the curve's going up in price and everything's going up in price and everything's paying. You got bribes coming in, you got revenue coming in, and you got easy money all over the place. Woo, everyone's throwing dollar bills and shit. And that's not now. That's not now. That's austerity. Because there will be easy money. It is inevitable. Might take some time. Will take some time. Last question. Jesse is in the house. Good morning. Finally caught a live show. It is a pleasure. I hope it's good guidance. It's mostly just rationality and just trying to help people do things that make sense, that are reasonable, rather than emotionally driven or greed driven or whatever we've gone through over the last couple of years. Let's wrap it up for today. Monday, June 20th, 12:46 p.m. As always, I thank you all for joining me. Tell everyone to subscribe. After Party is always on Discord for the most rational community in the entire crypto space. It'll be a larger rational community as markets turn around in the coming months and years, but it's still a very lovely and much appreciated rational community nonetheless. Last question, GM, what kind of tech are you looking forward to for BTC DeFi, and metrics do you track beyond TVL? Just any VM from Syscoin and Rootstock, layer 2 Bitcoin secured EVM networks. But even Polkadot is interesting, and I don't completely dismiss Cosmos hubs. That's a big deal. It's integrated into the BSN. That's not trivial. So that's what I look forward to. Thank you for the stream. Have a good one, Johannes. Thank you all. I will see you again on Wednesday. Y'all have a good week. See you soon. Peace.